The gentleman from Florida, Mr. Posey, is now recognized for 5 minutes.
Thank you very much, Madam Chair. Dr. Godspeed, I feel like I've seen this movie before. To paraphrase a classic, we appear to be rounding up the usual scapegoats for inflation. Under the heading Primary Causes of Recent Inflation Trends, the majority hearing memo lists supply chain bottlenecks and shortages, lack of housing supply, lack of competition. There's no mention of the majority's deficit spending and the monetization of those deficits to dramatically increase the money supply. Last week, Chair Powell agreed that inflation is a monetary phenomenon. The way we ended up with this inflation is that the government dramatically increased the deficit in the Rescue Act and other legislation, and the Federal Reserve provided the lending to support the deficits at no charge in interest rates. The primary cause of inflation is deficit spending financed by the Federal Reserve buying the debt and increasing the money supply. One price increase that stands out from the rest, and that is the skyrocketing increase in energy costs. It's been mentioned by almost everybody here today, especially the price of gasoline. Even before the Ukraine invasion, the price of unleaded regular was closing in on $4 a gallon. This is a steep relative price increase, and most analysts understand that this increase was a result of supply restrictions that followed on the administration's assault on the domestic energy production. Please give us your assessment of how reversing the administration's restrictions on domestic oil and gas would reduce gasoline prices, and how much would gas prices decline if we reset the clock to January 19th, 2021, and erase the administration's impact on the domestic energy sector. Could we expect to restore energy independence as we had before?
Well, thank you, Congressman. And I think, as you noted, we've heard some of these stories before. In fact, in the 1960s and 1970s, there were a lot of allegations that the price pressures that we were observing were the result of oligopolistic or monopolistic competition. And empirically, those claims were subsequently tested and rejected. I would expand upon a remark I made in response to questions from Congressman Barr, namely that if we look at the historical relationship between the price of West Texas Intermediate crude and oil rig counts in the United States, those two series typically tracked each other very closely, meaning the price of oil goes up, rig counts go up, we get more supply. That relationship completely broke down in 2021, and I think that was a result of the regulatory crackdown on domestic energy production and the looming prospect of more. Now, it's hard to say where domestic oil prices and gasoline prices would go in the coming months simply because of so much international geopolitical uncertainty.
Well, thank you. You know, one of the favorite boogeymen of our friends on the other side of the aisle is the evil price gouging firms. They're one of the usual scapegoats for unsound fiscal and monetary policy. I believe we can expect that businesses will respond to market forces, including inflation, like any other economic player. But it's more than a little naive to habitually resort to the price gouging monster to explain 7.5% inflation. Is there any solid, convincing, credible, and peer-reviewed evidence that businesses with disproportionate market power have been a major cause of inflation through price gouging?
I've seen no serious academic study to that effect, and I would add that most empirical studies, and for that matter, theoretical papers on this, suggest that in the short run, the pass-through from cost to price is actually lower in less competitive markets than in competitive markets. In the long run, competitive markets have lower average inflation rates, but in the short run, the pass-through is actually higher in competitive markets.
Well, thank you. And while I believe the role of housing supply and inflation is far more subtle than the other side suggests, and listing it as a major cause of inflation, I do have serious concerns about the cost of building housing. And I believe that the cost of building new housing, whether single or multifamily, determines the prices of houses and rents at the margin of the market. Adding demand to a housing market in which the cost of a new housing is continually being pushed up by regulations and restrictions on innovative building techniques really serves mostly to just drive up even further the prices and rents of all housing. Do you agree that to make significant progress in providing affordable housing, we need to focus on bringing down the cost of building new housing?
Well, I would say that we should be focused on increasing the supply of housing generally, and we have a problem that it is very difficult to construct new housing in the United States. And we should ask ourselves, why did the price of housing go up so much in 2021? Well, let's remember that housing and autos are the two most interest rate sensitive sectors in the U.S. economy. Thank you.
Thank you. Thank you, Madam Chair. I yield back.
Welcome.